So a short sale in real estate is also known as a pre-foreclosure sale. As a homeowner in a short sale, you're voluntarily selling your home for less than the balance that's owed on the mortgage before the bank decides to foreclose on the property and just take it from you. Ultimately, your mortgage servicer has to agree to the short sale, so there is an approval process. But if they do agree to the short sale, you can sell your home for less than what's owed and then pay off most of the mortgage balance with the proceeds of the sale. Then you don't have to worry about the remaining balance with what's called a waiver of deficiency. A deficiency waiver means that the mortgage company has agreed not to sue you for that unpaid balance that may remain after the home is sold. So, for example, if the mortgage on your house is 120,000, and the house sells for 100,000, that $20,000 difference is the deficiency. So the bank will waive that $20,000 difference and you get to walk away free and clear from the house and avoid any future obligations to your lender. Some of the reasons you may need to do a short sale are that you're facing a long-term hardship, you can no longer afford your home, you may be behind on your mortgage and or owe more on your house than what it's worth. So you may ask yourself, why would the bank agree to a short sale instead of just taking the property? Great question. And the answer is very simple. The banks are in the banking business. They're not in the real estate business. So what happens when the banks foreclose is that the properties may sit for years upon years, abandoned, neglected, and ultimately just not making any money. So the properties start adding up. 10 properties becomes 20 properties, 20 properties becomes 50 properties, and even worse, during a recession where houses are being foreclosed on by the hundreds every day, it gets to the point where the banks can't keep up with the inventory. Then they end up losing even more money on the properties when they eventually get to wholesale them, if they even get to wholesale them. So when they do wholesale them, they'll sell them at an extreme discount in large pools. Now for the consumer investor, that's more of a dream than a problem, but not so much for the banks. So the banks are willing to approve a short sale at a much smaller loss and then not have the headache of the whole sale process of listing the property, dealing with appraisals, maintenance, fines, possible squatters, etc., etc. Another question you may ask yourself is, why wouldn't I just do a loan modification or refinance and just keep my house? If you want to keep your house, a loan mod or refi is the way to go if you can get approved. Just keep in mind that if you do get approved for the loan modification or refinance, now you're paying much more for the property than what it's worth in interest and fees, especially if you already owe more on the house than what it's worth. So all you're doing is adding interest and fees on top of interest and fees. Whereas in a short sale, it doesn't cost you anything. It doesn't negatively affect your credit like a loan modification or foreclosure, and you get a fresh start. You get a second chance to do it all over again. To initiate a short sale as a homeowner, you have to be 100% cooperative and work with the bank. So what does that mean? The bank is going to require a checklist of documents to approve the short sale. All of these documents have to be impeccable and furnished upon request. Some documents have to be updated on a weekly, bi-weekly, and even monthly basis. The first step is to get a realtor to list the property that's a short sale expert. The listing is the first set of documents at the top of that checklist that the bank wants to see. The bank wants to know that their property is being publicly marketed to every potential buyer in the market to get the highest possible offer. That way they can recoup as much of their money as possible. If the listing does expire at any point before closing, there's a huge possibility that the bank will require a new listing. I've seen very, very rare cases where the bank will proceed to close with an expired listing. And if they do, it's not because that they've already approved the short sale. It's because that short sale agent put up a relentless fight to expedite that closing. But you don't want to take that chance. The success rate of winning that argument is very, very low. Short sales can take a long time and take a lot of work from all the parties involved. The last thing you want is to have a closing date and then have the bank cancel the closing and have to start all over again simply because the listing expired. The bank wants an active listing during the entire negotiation process because they're actively reviewing every offer that comes in on the property until closing day, even if the property has a buyer on it. It doesn't necessarily mean that they'll deny the sale to that buyer that's already in motion, But they want to make sure that they have every offer made on the table for that property, so every possible buyer has a fair chance to obtain the property. Along with the listing agreement, an authorization letter is needed. It's a written letter from the homeowner to the bank stating that they are listing the property as a short sale and that the short sale agent will be negotiating on the homeowner's behalf. The buyers and sellers must also sign an arm's length transaction affidavit. This is a written promise to the lender stating that there's no pre-existing relationship between the buyer and the seller, preventing the seller from selling the property to family or friends. The next set of documents requested as part of the short sale checklist are pay stubs. Pay stubs have to be submitted from all parties listed on the deed and mortgage up until the closing date. This is one of those documents that have to be updated frequently. I usually send out a reminder to my clients and collect them every single pay period because the banks will send out a notice wanting updated pay stubs, and they're going to want them within 24 to 48 hours. And of course, life always gets in the way. I may not end up getting them from my client for a few days to a week sometimes. And if they aren't submitted in that allotted time frame, the bank's going to close the file, and you either, if you're lucky, get to start all over again, or the bank's just going to begin foreclosure proceedings. W-2s for the past 2 to 3 years have to be submitted as well. If you haven't filed your taxes during that time frame, you have to write a letter of explanation, sign it, with proof of extensions that you requested from the IRS showing that you pushed your filings back. Proof of any income you made on top of your job should be submitted. If you don't have a job, you write a letter of explanation, you sign it, and then we submit that with the W-2 forms for the past 2 or 3 years if you filed. Bank statements. The bank will want to see bank statements. Every bank is different. Some banks will want every page of your last 2 bank statements, and I do mean every page, even the blank pages. Other banks will want every page of your last 4 or 6 bank statements. Again, this is one of those documents that has to be updated every month because the bank will request updated bank statements at the last minute at the worst time possible with a very small window of a time frame to submit it. If you don't submit it in that time frame, the file is closed and you have to start all over again. And that's if the bank doesn't begin foreclosure proceedings. Another question you'll ask yourself is, why do I have to submit so many personal financials to the bank? The short answer is that the bank wants to ensure that you're in fact having a financial hardship and you can't afford the house. What you're ultimately doing is building a case to give yourself the opportunity for that fresh start, so that way the bank can forgive that difference, that deficiency that you owe. As a homeowner, be prepared. There's going to be a point in time when the bank will be sending an appraiser to the property. Most of the time it'll be one time. Sometimes the appraiser will have to go 2 or 3 times. Or we may need to give a contractor access to the property for repair estimates that the bank will want to see to justify certain offers being made on the property. An example of that is if the house is, let's just say for number's sake, $100,000, and the bank is willing to accept $90,000, but due to some repairs needed, the highest offer on the property are $30,000 less at $60,000. The short sale agent will need to show the bank 3 contractor estimates to justify for that $30,000 difference the house needs in repairs. Potential buyers may want to see the property several times. As the homeowner, again, be prepared and fully cooperative to allow access to the property at any given time. As I mentioned before, short sales can take a long time. The more cooperative you are, the faster and easier the process will be. A lot of people are under the misconception that short sales are difficult because they aren't used to the large amount of paperwork, all the extra steps involved, and the number of people involved. As long as the homeowner is 100% cooperative, that right there is more than half the battle. A short sale does not cost a homeowner anything. Anyone involved in a short sale, whether it be the realtor, attorney, appraiser, all get paid by the bank. Sometimes even the homeowner will get relocation expenses paid for by the bank. As far as any tax implications, the Consolidated Appropriations Act of 2021 cancels out any taxes on that forgiven debt. So what's going to happen is towards the end of negotiations, the homeowner will receive a 1099-C form from the bank, which is a cancellation of debt form, showing the qualified principal residence exclusions. Keyword, principal residence. You should still 1000% consult with your accountant if you have any questions about that. If anyone needs a short sale expert in your area, call or click the link in the description and request an agent.